Hello friends, in this particular section of this video what we are going to do is we will try to understand the concept of charge creation. Now you see, whenever banks used to give loan, they used to take some sort of collateral or some sort of securities in the due process. Now when you collect some security from your clients, which maybe you're using as a sort of cover for any future default, you see you need to do proper documentation. If documentation is not done properly, it will be tough for you to recover from those collaterals too. Okay, so in this particular section what we'll try to understand is how bankers ensures that they are going to get their dues settled on due date against the collaterals that they have collected. And then in this particular slide you can see collateral is according to the nature of your collateral, according to the nature of your security, we need to create the charge. Okay, so charge creation process is nothing but it is a specific set of documentation which is required according to the nature of security. Let's proceed further. Here we have mortgage, hypothecation, pledge, assignment and lien. Majorly these five types of charge in discussion. Let's start with something called as collateral first. Collateral is, in financial word, is nothing but it is a valuable asset that a borrower can pledge as a security for a loan. You see, in this video we are trying to see certain charges which can be created on collaterals. So what are the various securities which can be offered? Let's say real estate, any property is given to bank as a security, some equipments, machinery, a vehicle is given as a collateral, maybe stock or the inventory of finished goods, or let's say raw material which is there in your warehouse can be used as a collateral. Invoices or the bills or bill receivable, the list of debtors can be used as collateral. Okay, and then finally you see, if you have certain investments in certain financial securities, they can also be used as a collateral. So we'll try to discuss all these collaterals and their respective nature, and then what type of charge creation to be done in the proceeding slides. Now the main takeaways from this is collateral is an item which has a value and can be pledged to secure a loan. Okay, collateral reduces the risk for the lender. Banks will be secured if they get collateral. If a borrower defaults on the loan, lender can seize the collateral and can sell it to recoup its losses. Okay, finally, you see, mortgages and car loans are two type of collateralized loans. In mortgage, we try to give the security of property, and in car loan, we try to give again the documentation of vehicle with the charge of your banker. So these are two examples of collateralized loans. Then apart from this, you do have certain times you do have personal assets, like you have insurance policy in your name, or let's say you have Kisan Vikas Patra or National Savings Certificate. So you can use these also to take a loan. Okay, we'll see how this process goes. This is the difference between mortgage, hypothecation, pledge, assignment and lien. This chart tells you in detail what is movable, what is immovable, in what situation are you supposed to do this. Okay, so it is an overview, so I'll just skip it up so that you can refer it of your own whenever you need, but we are going to do a detailed discussion one by one on all of these, or from the perspective of who is going to hold the security, who is going to hold the title of the security, and let's say in case of a default, how recovery is to be made. We'll try to discuss them individually one by one. Okay, let's go in. So let me just give you a short example here. Mortgage is immovable in nature, so land and building will go into mortgage. Hypothecation, something movable in nature, but the custody needs to be there with the borrower, so it goes into, you see, hypothecation like vehicle loan, stock loan, loan against stock, loan against debtors. So they all will be going into hypothecation category. Then you have pledge. Pledge is again a security which is of movable nature, but here you see the security is to be kept with the banker, not with the borrower. So gold loan, stock related some loans. Okay, so in that case you see that there has to be the custody transfer or some sort of lien marking. Okay, let's go further. Assignment is another type of charge which is usually created on the securities offered by post office, like Kisan Vikas Patra and National Savings Certificate. You can take a loan on these instruments. The only thing is you have to do a documentation with post office where you are transferring your interest to the banker's name. Okay, so this is transfer of interest. Transfer of interest is called as assignment. So once you clear your loan, you can get a NOC from bank, and then that will help you to get the assignment terminated, and you see you will get the benefits on the maturity date. Similarly, we do have lien. Lien is only possible when you have something which is in your custody, any on which you can put up a blockage. So you'll see in our case it will be loan against FD, which will be taken up in lien category. So I'll go to all these segments one by one. Let's start with mortgage. You can see in this picture it is actually a house which is shown to you in mortgage. So you see subprime crisis in America, which is in the year 2008, is something to do with mortgage crisis only. So it is a process of offering something as a guarantee. Okay, mortgage is nothing, but it is actually technically a process of offering uh, something immovable in nature as a guarantee, as a collateral for a loan. Okay, so when you do it, it is actually a immovable asset. Second, title is getting transferred to bank through registered mortgage. Okay, so registered mortgage is actually very costly. Hence, what we do is like we do it on like we do it through certain alternative documents. Registered mortgage will cost very heavy. Why? Because stamp duty is to be paid. Let's say you're taking loan, so name of the title of the property has to be transferred to bank, and later on again a bank has to transfer it back to you. So he's going to bear this cost of transferring the name again and again in official records. So it's going to be costly affair. So you see, instead of registered mortgage, we'll go with some easy method through which you see simply doing some documentation in bank, you'll get your title in your favor. So first chart that we have is mortgage, where you have something which is immovable in nature, and title of the property is somewhat in the custody of bank. So borrower cannot sell this security off. Okay, when you take a loan and the securities, this house property, banker usually take the property paper, will give it to their legal team. Legal team will check their nil encumbrance certificate. They'll get a nil encumbrance certificate by visiting tehsil office. Will get the data verified. So you see, point is like there should not be any existing loan on the same property. If it is there, then there may be a problem on a future date. So better is like you should have a clear title. Okay, so first is mortgage. Let's go to the second topic, which is hypothecation. In this picture you can very well understand it is something to do with vehicle, it is something to do with car keys. So what you're doing is like you're not doing much, but this is actually a charge created on tangible movable properties. Movable property is what is important in favor of the lender without any actual delivery of the possession of the underlying asset. Means vehicle is never to be given to a banker. Vehicle is going to be kept with the borrower. Borrower is going to sign some documents where title will be transferred. Okay, like in case of vehicle loan, RC book of your vehicle will have a section in it where it is mentioned as this vehicle is hypothecated to ABC bank. What it means is this vehicle is not self-financed. It is actually financed by a bank whose name is mentioned in. Okay, so this is what is hypothecation. It is features, mainly it is for movable asset. Second, title is transferred to bank, possession is kept with the borrower for usage. Third, it has clearly mentioned that registration certificate has an impression of the financer, and a NOC is required before final sale. Okay, you will not be able to sell it without getting an NOC. Next charge that we are going to create is on a security called as gold. Okay, it may be gold, it may be like any of your valuable items that you have. Bullion is actually the call. So what you are doing is like you are taking a loan against the security of gold jewelry or equity shares, or like you see in this case what is happening is like bank is going to keep the custody of gold in their vault. They'll do a this particular, when I say gold means it is a valuable asset. So they'll do an assessment of this gold. They'll check the quantity, quality through an approved gold valuer who is a certified agency. Like they are entitled to give certificate for the value of the gold. Based on their certificate, you see, we'll try to map the current market price, and accordingly we'll try to keep some margin with us as a element of security, and then we'll give the residual amount to borrower as loan. So what are the features in it? Again, it is a movable asset. Gold can be shifted from one place to another place very easily. Second, title is to be kept with the borrower. So even though you gave your gold to bank, the ownership is still there with you, but the possession is to be kept with the banker now. Now you see, in case sometimes I tell you a very unique situation what is going to happen. So let's say you have taken a gold loan. Okay, you have given all your family jewelry to a bank. So bank is keeping it in their custody. So one fine day, you people, your entire family, like they are invited by another relative for a marriage function. So when you need to go to marriage, you see there is lots of show of jewelry and all. So now your gold is there with bank. How will you like wear your gold jewelry? Huh? So it is in such situation what bank has certain special provisions in place. What it means ki, like if you clear your dues, you can take up your gold back. Huh? You can take away your gold back. But you see, let's say after the function, you again are going to return your gold jewelries to your banker. Means again banker will do an assessment. The same process that we did earlier. Initially, the processing cost will be borne by the client. Okay, so you have an option to get your gold released from banker's custody after making some advance payment. So proportionately, the amount of gold will be released for usage, and after use, you can return it back. But again, there is an element of processing. So what is in crux when it comes to pledge is again for movable asset, but here borrower is going to keep the title and possession is to be kept with the bank has a right. This is very important in pledge documentation, the terms and conditions which I mentioned. Their bank has a clear right to sell off the security in case there is a failure on the part of borrower to clear the dues on settlement date. Okay, let's say if it is your settlement date and you are not able to report, and banker has already done this documentation of pledge on the start of the day, so you see they'll sell it off without your permission, because already they have taken your permission, so no further permissions are sought. Now next is like you do have an element of assignment. Now if you look into this picture, you'll see a post office with two types of securities which are being issued. Financial securities, one is NSC, National Savings Certificate, and second is Kisan Vikas Patra. These are tax saving instruments. Both of these are tax saving instruments. So when you invest, it is stuck for a long period of time, 5 to 7 years. Okay, so you cannot break it beforehand because these are tax saving instruments. But what you can do is like government has given a provision where you can take a loan on these securities. Okay, so these are financial securities which are issued by post office. Title is with the borrower, which is actually of importance. So it is getting transferred in favor of bank. So if you want to take a loan, NSE is worth 1 lakh rupee as on day. Maybe future value is after 3 months it is 1.5 lakhs. So you see during these 3 months you need money. So bank is not going to give you money on your future value. It is supposed to be calculated on your current market value. So let's say it is 1 lakh rupee today. So keeping a margin of 5-7,000 rupee, which is why we are keeping margin, just to cover up our interest element. So we'll be able to give you 95 or 93,000 rupee. So this 93,000 rupee is your loan. But on maturity, you see, once you do this assignment, what is assignment is like, you're going to, as a beneficiary, you are the owner of this instrument. You have to go to post office, you have to do a documentation with post office where you are informing it to post office that you have used this security for a loan, and bank is now the new beneficiary. Even though the document is in your name, the policy is in your name, but on maturity date, because bank has already given you this money, on maturity date, bank will be taking this maturity value. Okay, the only way you can recover it back in your name is you have to clear the loan and get an NOC from your banker. So once you do this assignment with the post office, yani you are going through the proper documentation and you are giving evidence to a banker, you see banker will be able to give you a loan on the same security. Okay, so the definition of KVP and NSC is mentioned in the below. Next is like, you see how to take loan against pledge or like these NSC instruments. You, according to post office, NSC can be used as an instrument or it can be pledged. So they are using this word pledge also. Okay, so they are using it pledge. So whereas I'm saying it is assignment. Why we are putting in assignment is like, because we have to transfer the interest to someone else. So this transfer part in the form of a documentation is important. So in pledge we don't transfer it to someone. We actually give it to someone for a loan with the condition that if I don't pay, they'll sell it off. But in assignment, I'm giving my rights to someone else. Okay, so this is like owner. Even though I am the owner, my name is mentioned, but still it is the other party who is going to get the benefit on the due date. So it has to be done in the form of a prescribed format. You have to go to post office. You have to mention your bank name. You have to mention the loan amount, and you have to get it stamped and added into the records of post office. Once you get it done, you have to come back. Okay, you have to come back and you have to inform it to your banker. You have to do the documentation with the banker. Yani they'll collect the form, will do their own part of verification, and accordingly you see your loan application can be processed. Now, next charge which we have on security is on fixed deposits. Now, you see fixed deposit. I'm let's say I'm State Bank of India. You have your account with us. So whenever you have some surplus, you are making your FDRs with us. So FD is from my bank only. Then I can give you a loan. But if let's say you have your bank account, normal bank account with HDFC, and you would like to take a loan from SBI, it is not allowed. Okay, it is not allowed legally. Why? Because on FD which is given to you by HDFC Bank, I don't know how I am going to put a blockage. I will not be able to block. But if it is an FDR from my bank, my system, I can put a lien on it. I can block it. So whenever you are going to withdraw this money in system, the clerk or the person who is going to do an execution will be coming to know about the problem and will be means you see system will be giving you auto warning that this FDR is blocked due to an FSLD, fully secured loan against deposit. This type of loan is fully secured. Okay. Now, what is this FSLD, fully secured loan against deposit? It is a loan with very low rate of interest. So, usual provision is like whatever is your FD rate plus 2%. So, 200 basis point is maximum what bank can charge you on this. There is no processing charge in this type of loan because you have nothing to do. Simply, you have to discharge the FDR. When you sign on the backside of your FDR, where instructions are to be given on the date of maturity, this is what is called as discharging an FDR. Minimal documentation, only a signature on the backside, and another one application form where you have to put your signature. No score, CIBIL score will be checked. Why? Because this is your FD, which is like against which you are going to take a loan. So loan amount is just partial amount of your total FD. Okay. So if you don't pay, they will deduct this amount on maturity and you'll get the residual amount in your account credited. Okay. No, there is no prepayment closure. Fine. So these are the features of flexi fixed loan against FD. Okay. So what are the features? So in this, what is happening is like we are going to lien is nothing but it is actually a right to keep the possession of the property belonging to another person until and unless a debt owned by that person is discharged. Now you see FD is a security given by borrower to bank. Okay, bank is the lending institution. So now we can block it. We can block this FD. This will not be released until and unless the loan is repaid. So what is the amount of loan? Only 10% of total FD. 20,000 rupee loan for a 2 lakh rupee FDR. Now you see this is very basic, very minimal. So bank will be able to recover it on the maturity date by closing the FDR. So FD receipt is already discharged by the borrower while loan documentation were executed for the beneficiary. You see, this is what we are learning through the system. I hope you are clear on this and the various types of charge that are being created on the nature according to the nature of the security, whether it is movable or immovable. Okay, so you see whether the possession is to be kept with the borrower or possession has to be kept by the banker. So these points will make things easy for everyone. Good day. Take care. Bye.